Hi, this is Kirk with Forex Strategy Secrets. I just want to share with you a little bit about my background and then share with you some tools that we have that can really accelerate your trading efforts and knowledge. Back in 1995 is where I first became interested in trading stocks and options. And I did that for a few years and then realized that I needed some coaching, some further knowledge. So in 1999 I received my first coaching from Bill Williams. So over the next few years I mostly spent my time working in options. I preferred the options over the stocks themselves. In 2005 is when I was first introduced to the currency market, and after studying the currency market for about a year, in 2006 I went to work for IBFX, a broker in my local area. I wanted to learn the insides of the currency market. And as we all soon find out, there are many more good trades in the course of a day than we can manually find or even take. So Jed and I came up with some alerts, the Norwood alert, the early bird alert, to help find trades. We realized that we needed to be able to manage those trades and have the trades closed when we were not going to be there. So we came up with the early bird stop and the Norwood trailing stop. So those are the tools that I want to share with you today as to how you can take more trades and manage them with less effort and less stress. So I'm going to go to some charts and show you how we use these trading tools to enhance our trading efforts. For this illustration, we're going to use three time frames. We're going to use the 4-hour, the 1 hour, and the 15-minute. The 4-hour is a directional time frame to find the direction that the market will be going, that we would want to be looking to make a trade. The 1 hour is to confirm that direction. So once the 4-hour and the 1 hour line up in the same direction, then we would look for the 15-minute to time our entry. So we're going to first of all look for an early bird on a 4-hour. Now an early bird is where the momentum indicator changes colors from red to blue or blue to red, and that's where you would then decide whether you wanted to take a trade in that direction. So this is a kind of a choppy area right here, but it's a larger time frame, so I'm going to show you how to use these tools to take advantage of some trades. Of course, you want to get into the big long moves like we see off to the right here, but the principles are that you can make pips in a short period of time if you have tools to manage it. So right here where this vertical line is, we have a color change from blue to red, so we'll be trading short. Now let's go to the 1 hour and see if we have a red in that area as well. Yes, we have a red indicator going that way as well. Now it looked like it maybe it would have been blue to start with, but eventually it became red. So then we go to the 15-minute to time the entry on that trade. Now what are we looking for here? These red arrows and blue arrows are Norwood alerts. So what you want to do is take the red arrows if you're going trading short. Now the 4-hour said it was going short, so that's the direction we want to be trading at this particular time. So if we were to receive a blue arrow, then we just ignore that. So right here at this vertical line was where the 4-hour said that it was first going to be going short. Now we know that it went long a little bit, and it indicates selling this 15 minutes, and then it started coming short. So our first entry signal would have been right here. So we enter that trade, and if we just managed it on that 15-minute, we would have received 30 or 40 pips. We might have been taken out here because of the stops, and we'll get into the stops in just a moment. But we suggest that you go to the 30-minute to manage those trades. You can see how it's smoothed out, and you don't see that little hesitation there. So we got in up here, and we still got the 20, 30 pips down here. So that's what you do, is look for the direction of the trend on the 4-hour. Now let's go to another one. Going back to the direction. Now this is a choppy market right here, but we're looking at a 4-hour chart. It was a early bird going blue, going long. So now we're looking for the confirmation on the 1 hour right over here to confirm that it does. It says it's blue, is going in that same direction. Now let's go to the 15-minute and time our entry. Right here it was red. It said no, you don't want to take a trade. But about half an hour, 45 minutes later, we received another alert, the Norwood alert, which told us now we're trading the direction of the trend of the larger time frame. So right there on that price bar. Now if you manage this on the 15-minute and gotten out of the trade when the early bird stop, which is the same thing as early bird entry, but it's just taking you out. When the market changes colors, that's time to exit. But let's go to the 30-minute and see if it would have given us a little more room to move before it said to get out. So we go to the 30-minute. It went through this area here and didn't really say to get out. And so right up here would be the first point after about 40, 50 pips is where we would have been receiving our first exit signal. We receive another Norwood alert going in the same direction. That's on a 30-minute. Let's see what the 15-minute does. Okay, right over here, the 15-minute did give us another signal to get in. And you can see that if you just managed on the 15-minute, it would have taken you out when that color changed. But let's go to the 30-minute. And right here, it would have taken us out at about the same spot. So either time frame on that one would have given you a few pips. Now, let's go back to the 4-hour. We were just trading through this little choppy area right here. This is only one currency pair. What if you saw several currency pairs and they all gave you the same, gave signals, 4 or 5 trades you were able to take? Now, how do you manage those trades? The thing we're finding is the exit of the trade many times is more difficult for most people than entering the trade. They can find decent trades, but how do you manage them to maximize the profits? Well, the thing that you have to come to grips with is you're not trying to take the max amount of profit out of every move. Just take what the market's willing to give you. Let the market tell you what is going to be able to be traded at any given point. So if you take 10, 15 pips on 5 different trades during this small period here, that was okay. But then you're going to all of a sudden find times where you'll get 4 or 5 trades, currency pairs you're trading, and you're going to be able to take out 100 to 200 pips on a move. So you average that out over the course of a month, and you end up having a nice return on your money. So how did we get into the trade? We received an early bird alert on the 4-hour. We confirmed it on the 1-hour, and we went to the 15-minute and timed our entry. How did we get out of the trade? We went back to the 30-minute to manage it, and we set the early bird alert, and when it changed colors again, when the alert changed the colors, then the tools exited the trade. You did not have to be there. You could have been doing many other things, working, sleeping, just taking care of your normal busy schedules. It's not as difficult as it sounds. It's simple, but it's not easy, because you have to discipline yourself to follow the signals and let the tools bring the alerts to your attention. Here's what the early bird alert would look like as far as the charts that you're wanting to schedule a time frame on. You notice that I have them set all at the same point at this stage, the 4-hour, the 1-hour, and the 15-minute. You can set them any way you want them on any currency pair. For this illustration, I wanted to set them all the same so I could get some alerts going off. So let me show you how I'm going to use it. Even though the 4-hour was not the first alert that went off, this is how I find a trade. So when we first start looking at the charts, the first alert that I had go off was a 1-hour on the pound Australian on an early bird alert going long. And so that's the direction we'll be looking to go. What do you think the 4-hour chart would be looking like with the 1-hour going in this direction? We'll confirm that. See, right in here, the 4-hour was going long, so that would be the direction we'd be wanting to trade. And now we have a confirmation on the 1-hour saying that that's the direction we want to be trading. Now we're going to go to the 15-minute chart, and the alert came just a little bit, just a time frame before, but this is still a good signal. So this would be where I would be entering a trade, because it's so close to the setup of everything, and it's when I got to the market and when the market gave me the signals. So that's how you would find a trade, by letting the 4-hour be the first signal or the 1-hour. Because if the 1-hour goes off, then you can confirm the 4-hour and say, yes, hey, they're both in agreement now. Then go to the 15-minute and take a trade in that direction. So we take an order at this point, place a buy order, be placed right there, and then what are we going to do? We're going to then go to the 30-minute time frame and set our stops, and let the 30-minute time frame be the time frame when it changes colors and comes back the other direction. Then that's when it will close the trade, and we will have let the tools manage the trade for us. The thing that you're going to find by using the early bird stop and the Norwood trailing stop are you will receive a few small losses, you'll receive a few small wins, and you'll receive a few large wins. You notice I didn't say anything about large losses. That's the thing of the past when you use the tools. You're going to take losses in the market. That's just part of trading. You just want to take more wins than you do losses, and try and have your wins be a little bit larger than your losses. If you come up with that scenario, you're going to have a winning account, and you'll grow and be successful in the currency market. Don't get concerned about a few losses. That's just part of trading. There are people that have high win-loss ratios, but they've developed those skills. It takes a while. We have seen examples where you can make 50% wins and 50% losses, and because your wins were bigger than your losses, you controlled those losses, then your trading was successful and you were actually able to make money. So I want to give you an example now of a potential loss. I don't know whether this will be a loss or not, but it looks like it'd be a hard area to trade. So we put a vertical line here, and eventually this 4-hour turned blue, but it was way up to the top here when it turned blue. So let's go to the 1 hour and see if that confirmed. Well, the 1 hour confirmed that at some point after that 4-hour turned blue, there would have been a trade that we could have been looking for. So right up in this area is where the 4-hour would have turned blue. Now let's go look at the 15-minute, and there was an alert right in that area. So chances are there would have been a potential trade right there. 4-hour may have turned colors clear up in here. In that case, you're not looking to take a trade. It's not a fresh trade anymore. It's been going for quite a while. The trade was fresh over in here, a little rest, and this is where the better move took place. Up in here would not have been so good. But the point being, let the alerts tell you when to get into the market or out. And you want fresh. If it's not fresh, then you probably don't want to take the trade. If you had taken the trade, you may have suffered a little bit of a loss right there. Now then the market turned and went short again. So that's the signal that you're really looking for, is the short on the 4-hour. Turned red. The 1 hour agreed with that, and the 15-minute did not have an alert here, so you wouldn't have taken a trade there. It did have a signal here. What if you'd taken that trade? Well, you managed on the 15-minute, it gave you 5 or 6 pips, but if we stick to our rules and traded on the 30-minute, let's see what would have happened then. So we take the trade here. That would have been, I'm going to say we were lost on that trade. But you see, it was not a very big loss. At most, you would have lost maybe 4 or 5 pips on that particular trade. So we come across, and these two alerts right here were all in the same scenario, but then we have another alert going short right here. Okay, now we had a loss here, and now it says, hey, there's something going short. Let's manage that on the 30-minute. And so from clear up here, it came clear down to here. We made 30, 40 pips on that. Yes, it did go 75 pips in our direction, but you weren't there. You had maybe 3 or 4 trades on, making 20 to 30 pips each. And so you had a nice trading day or trading session because you let the tools manage it, and you were off doing something else. So that's the concept. Get an early bird alert, starts the whole trading session. If you have a 4-hour that gives you a direction of a blue color or a red color, and you want the 1 hour to confirm that blue or red color. And if the red is fresh, if the 1 hour is fresh, going red or blue, then that's even better. Then you look for a fresh Norwood alert on the 15-minute. If it's only one time past the Norwood alert, then I would say that's still fresh. If it's 2 or 3, be cautious, because it may be already well into the move. That's to get you in. Then you take a trade and move to the 30-minute, and as soon as the early bird changes colors, the indicator changes colors for an early bird stop, then that would be your exit signal. And you stick to those rules. If you just stayed right to that, let the tools do the management, you'll have a couple of small losses. You'll have a few small wins. And worst case scenario, those wins and losses will average out. But you'll have a few large wins that really make the difference in your trading account. So you need to take as many of the trades as you can find and see, and don't be too concerned if you do have a loss, because those big wins will come along if you take all the trades and not get spooked. You say, I had 2 small losses, I lost 10 pips. And then so I didn't take the next one, that was your 100 pip move. So we want you to take advantage of the alerts and learn how to use them. You can do it manually, or you can use the automated alerts. Either way, the signal of the trading would be the same. You're still taking high probability trades. When you're first starting out, I would suggest that you get the basics of the nth degree trading system down. Become familiar with that for about 4 to 6 weeks. At that point in time, then take advantage of the alert program. If you're trying to learn how to use our indicators and learn the stops and the alerts all at the same time, you may become overwhelmed. And so you want to take it in steps. Learn how to do everything manually, then you can learn how to do everything automated and accelerate your growth as a trader, and as your skill level increases, you'll be able to take more trades.